Property investing is our core fundamental strategy of creating wealth. But there are pros and cons to this, and that's what we're going to be speaking about today.
I know we're always speaking about the opportunities that come with property investing. However, what really lies on the other side is what we will be unpacking today.
Now, let's start speaking about the cons of investing in property. What stresses are there that you feel like, you know what, if I wasn't really passionate about this, I would have long time left this whole industry?
So what I'll do is that right now we'll focus on the rental, and then after we'll be looking at it from a flip side. So with rental, I know for sure that a lot of people do not like dealing with tenants. I mean, it's the worst experience. People do have the worst experience out there. So some people are like, you know what, I'd rather remove myself from dealing with tenants. So is there another option that I can actually get into property investing without dealing with tenants?
Of course. So now, one thing that a lot of people like saying is that with property investing, you could never go wrong because you just buy the property and you put a tenant in that property.
Yeah.
Not realizing that tenants really mess up your place. If you get the wrong tenant, they'll proper mess up your place. And the thing about it is that when you do vet the tenant, on paper, they might actually look good. However, in practicals, they might not be good. So what do I mean by this? So whenever we get a tenant into our property, number one, you need to make sure that you run a credit check on them. Number two, you need to make sure that they have a valid ID and they also have a valid passport if they're not actually residents of South Africa, right? So now, looking at those particular factors, they are the ones that will actually direct you if the person is right or wrong for your property.
Yeah.
I think then the last one would be your intuition. So your intuition would be, does your blood feel right putting this person in your property? So now the thing about it is that when people come viewing, they all dressed up really neatly. However, you don't know where they're living. How does that actually look?
Yeah.
So they can actually mess up your property and then leave your property. So in that way, that means that in that particular month, your property would actually be vacant. So basically meaning that you won't be collecting any money. So now this becomes a bad thing when you're looking at it from purchasing a property using a bond or purchasing a property using cash. Using cash, that basically means that in that particular month, you won't be making any money.
Yeah.
So looking at a bond perspective, you will actually be losing the bond money that you need to pay on a monthly basis.
Yeah, I mean, last one, we were actually having a conversation with aspiring property investors that happen to be our clients. So we were discussing in terms of the experiences that we go through in terms of dealing with tenants. I remember that we got a call from one of our tenants and we told them that, you know, every time we get a call from a tenant, it's never good news. You must know that something happened.
If you are a landlord and you've actually gotten a call from a tenant and they have actually gave you great news, please do put them down in comments.
Or just wishing you happy birthday. I'm not sure if you received that call. So the call actually was like, "Tring, tring, how you guys?" We're like, you know, we're cool, man. What's up? What's happening? You'll get the keys next door. I'm already gone. And we're like, what?
That's the worst call.
So that is the worst call because you will be looking at where the month is. We're looking at where the month is. This was already at the end of the month and the tenant just left us like that. So even the damage to the property, we knew that it was a mess because this person didn't call us. They didn't actually tell us that the situation is this. Come through, let's have a conversation. So ultimately, you need systems in place when you're dealing with tenants. It doesn't necessarily mean that when you are afraid of dealing with tenants, that means renting is not your strategy. So now the question level is, how can I counter dealing with tenants?
Dealing with tenants, something that you really need to take into consideration is that you need to take a 1 month deposit or a 2 month deposit. This will vary from one property investor to another. So some will require a 2 months deposit and then some will require a 1 month deposit. This will also be area specific because now in some areas, people are only willing to take out 1 month deposit, and now you can't really force it down other people. If, say, for instance, my next door neighbor is saying that you need to take out 1 month deposit, and I'm really keen on me saying that taking out 2 months deposit. So you really need to look around that. And now I know the question that comes with the 1 month deposit is then, if my tenant says that they want to live in the property for that 1 month deposit, do I actually let them live in that 1 month for that 1 month? The answer is no. You do not actually let a tenant live in that property. So technically, this 1 month deposit is going to be yours as the property investor until the tenant has actually vacated the property and the property has no defects that were left by the tenant.
Yeah. 100%. But let's look at the pros. One of the pros when it comes to rental is that it gives you a cash flow. So what I like about cash flow is that I'm able to build my credit profile when the bank is actually looking at me. So I've got an income, I've got expenses, and ultimately if I'm managing that good, I know that I can ultimately increase the possibilities of me buying the next property. So it's very important to understand the numbers when we're speaking about property investing. So if you want us to have a chat about this, hit the link below on Calendly and let's actually add value towards your journey. Because here's the thing, right? If you are running at a cash flow negative, it's going to be very difficult for you to motivate towards the bank that I can actually take the next home loan. Or it's going to be actually very tricky when we're looking at affordability. Because ultimately when we're looking at affordability, you are earning X amount and then they'll be looking at all your income versus your expenses. However, now if our expenses are actually more than our income, that's ultimately putting us at a back foot. So let us look at the opportunities that are out there. However, there's still a trick that even though sometimes I can be looking at a property investing opportunity, that will be giving me 15,000. However, all my expenses are worth, let's say, 8,000.
Sure. If you
So ultimately, we're looking at the rental strategy holistically, not only focusing on the cash flow, however, also looking at it in terms of how does my cash flow affect my affordability, so that I can ultimately buy my next property.
Sure. And then I think on my side, what I'm actually looking at when I'm looking at investing in property, I think a pro on my side is that I have full control over the asset that I'm purchasing, number one. I also have full control in terms of what returns am I actually going to be getting. So say for instance, I have 100,000 sitting with me right now, and I'm saying that I need a property that's going to be giving me returns of 25%. I have full control over what kind of property will I actually be buying, where will I actually be buying it, and I can actually go to the property and see the physical property on that particular property. Looking at that fact, number one, I'll be getting the cash flow. Number two, if I did buy it below market value, of which, of course, that goes without asking, it's going to be below market value, I can already have the difference between what I bought it with and that particular market value. So looking at that, I have full control over the asset that I'm actually purchasing. Whereas with other things, sometimes you don't have control, or you don't even know what they're actually investing in to actually give you those types of returns. So for me, I'm really heavy on control. I want to control wherever my money is actually going. Now, looking at it from a flip perspective,
I almost said you're a control freak.
when it comes to money, call me a control freak, man.
The biggest con when we're actually looking at it from a flip perspective was holding the property. But the good thing was that we knew that it's actually going to cost us so much, and we did actually put a couple of months to it, an estimate of months to it, that this is what we're looking at. However, when you're flipping, you know that there's nobody living in that property. So now with nobody living in the property, if your holding costs are too much, you need to really understand what will your holding costs be, so that it doesn't actually choke you out right at the end of the deal. I mean, imagine you taking out all this money, putting it into the project, and then only not managing to hold it when it needs to be sold.
It turns into a distressed seller.
It turns into a distressed seller. So ultimately what that can do is that the person who's going to come through to put the first offer, that's the offer that you can take. Like, I remember you had a neighbor who was actually pressurizing you to actually sell your property at their price. I'd like to actually understand, what was your response every time? Because that lady, every time we drove in the driveway, she was like, "Are you still selling the property?"
Of course. So now, what the lady said, I think this is a very important lesson that we actually got from that. That everybody has their perspective of how much their property is actually worth, and they are assuming that their property is the most expensive in the area. So what would happen is that the neighbor will actually come through for the viewing and then ask how much you're selling your property for. Then if it is actually beyond their what they think their property is worth, they're going to have a bit of a problem between yourself and them, not knowing that if you actually sell your property at a higher price, automatically that means that the average of that particular area goes up, ultimately meaning that the value of their property actually went up. But anyways, that's a story for another day. But looking at this particular neighbor, they would also always come to my property and say that, "Are you still selling your property?" And of course, yes, I'm still selling my property. However, I think the important part was that when I was actually selling the property, I already had a target in terms of how much I wanted to sell my property for. So I wasn't willing to go down anything less than X amount. So now the neighbor wanted to buy it way below market value so that they can actually get me out of that property. I mean, I had already done my numbers. I already know that what's the average in that particular area, so I wouldn't get conned, man. Mind the cons. So let's go to the pros now. What?
So when it comes to the pro, man, when you're speaking about flip, is the capital gains, especially if you're running it right. Now, I've actually understood that a lot of property investors are not necessarily understanding how to project your profit before you even buy the property. This requires actually a specific skill when it comes to running numbers, because what you would need then, you'd need to understand all your expenses by sitting with your contractor and also sitting with Lebo. He'll actually assist. Hit the Calendly link, and then you'll be able to actually determine that, okay, with this property, I'm not going to go any price below X amount. Still, as a property investor, you being in that area for the first time, and then the neighbor's going to tell you, but I've lived here all my life, so I know that my property is actually 1 million, and you knew that you wanted to sell yours at 1.3 million. That can actually cause a bit of a rift in terms of what you were thinking of pricing your property versus what they are saying that you should be putting your property at. However, if you know your numbers, you go in confidently because you know that that is where the average is. So I'm not going to be taking my price from my neighbor. I'm not going to be taking my price from my father or Lebo. I know that I'll be taking it from understanding what has been happening within that year. You're looking at the averages that were sold in that community.
Sure. And the last pro from my side is that when you're looking at selling or buying low and actually selling high, is that you are actually going to get a whole lot of cash that's coming to you at the same time. So now the thing is, when the money does actually come to you, what's your plan for that money? Say for instance, right now you flip 3 deals and you're able to actually get 600,000. So with this 600,000 that you actually got, what is your plan with that money? If you don't have a plan, then you might actually use it to buy another house, or you might buy a car, or you might buy expensive clothes. But if you know what you're going to be doing with that money, for example, if you are actually going to be using the whole 600,000 to buy a huge multi-let property, then that might be something to actually look into. But I feel like when you're looking at flip, you are being more aggressive in terms of making money on a faster pace, looking at it from a property investing perspective, getting that money and being able to actually use it to better the investment that you are putting your money in.
The one question that we're always asking is that once I get the money, what will be the return on investment in terms of whatever cent that I'm taking out from my bank?
No,
invest like a pro.
cheers.
So we've got 2 weeks left. Practically, it's 1 week. Next week, we will be hosting our property event at the Irene Country Club. My question to you is, have you bought your ticket as yet?
Get your seat today. Link is in the description. No,
Invest like a pro.